All right, I'm here today with Amy.Brazil with Axia Home Loans.
Hey, everybody.
My opinion, you're the number one lender here in Reno.
Love hearing that.
And I'm sure a lot of our clients who are going to see this video are going to know exactly who you are too. I wanted to have you on here today basically because there's been a lot of news in the media around home loans and these things called loan level price adjustments.
Yeah,
So first, can you kind of tell us a little bit about yourself and then we'll jump into that?
sure. So my name is Amy Brazil, and I have been in Nevada for 40 years. I moved here when I was 2. And I used to be a realtor, and I was a realtor for 20 years with Dixon Realty and Homegate Realty. And then I decided to go into lending, and I joined my business partner, Michelle Holbert, and we now have the Holbert Brazil team. And we love helping everybody from a first-time home buyer to a 10th-time home buyer, right? We're just here to offer support and education and great loans. So the Holbert Brazil team at Axia Home Loans, that's where we are.
One of the things I really appreciate you is because you have been a realtor and now
Yeah.
you're a lender, you can see it from both sides of the field, if you will.
Well, I think I bring a unique perspective that not other lenders do bring. I think I can help my realtors help structure their contracts better. I can help my, borrowers understand the process better. So yeah, I think it kind of gives me a bit of an edge.
Yeah, we agree. So what is this loan level price adjustments?
Okay, so let me kind of start at the beginning. So the FHFA, and that's a real tongue twister for me, stands for the Federal Housing Finance Agency, and they have oversight of Fannie Mae and Freddie Mac conventional loans. And they recently increased their loan level price adjusters, or LLPAs. Now, an LLPA is a risk-based fee that is assessed to a mortgage borrower trying to obtain a conventional loan. So this doesn't apply to FHA, VA, USCA, or any loan not backed by Fannie or Freddie, okay?
Okay.
And the LLPAs have been around since the financial crisis of 2008. So
Oh,
they've
wow.
been here for a while. And one place that people might be aware of this is that second homes, investment homes, condos, cash out refinances, they have always had loan level price adjusters built into them, and their interest rates are higher, and people are aware of that.
Right.
But what the FHFA has changed is the fee structure to now include higher fees on loan to values and on credit scores. Now, typically, borrowers don't pay these fees directly to the lender. They increase the interest rate to cover them.
Oh,
So you're going to see that if these fees are impacting somebody, the rate's going to be higher. And someone could pay them if they wanted to in the form of a point if they wanted to keep their rates lower. Now, the FHFA, got it that time, they feel that this new mortgage fee structure, it's meant to help people who historically have a hard time getting into home ownership. First-time home buyers, lower income households, lower scored homeowners or borrowers. And so the FHFA has a mandate, and I will read that to you, to support affordable housing by providing equitable and sustainable access to home ownership. And this is one way that they're doing that by lowering the closing costs to certain borrowers.
okay.
So I know it's pretty confusing, and there's been a lot of stuff in the
Yeah.
media about it. So I wanted to kind of just give a bit of a historical backdrop there.
Okay.
So I've got a chart if you want to see it, and I can kind of just give you some highlights of what they changed. And then I'll give you some examples of how that actually impacts a different borrowers if you'd like.
Yeah, let's see the chart because I think that's everybody's question is like, what are these changes? How does it impact people?
Okay. So let me make sure I can do this. Okay, so can you see my screen there? Is that showing up for you?
Yes. Yep. I
Okay.
see it perfectly.
Okay, so we'll start here at the top here. So some of the changes are a higher credit score is needed to obtain the best rate. So previously, anyone with a 740 or above credit score was placed in the lowest risk credit score, meaning they got the best rates. But they changed that, and now you have to be a 780 to get the best rate. Okay.
Oh, wow. Okay. So now you
That's,
need a higher credit score.
yeah, you need a higher credit score to get the very best rate.
Is it-
They changed first-time home buyers have more advantages. So loans with 3% down over here, which are typically first-time home buyers, now have lower fees regardless of your FICO score. I could be a 780 borrower putting 5% down. I'm going to get a benefit on my closing costs. I could be a 640 credit borrower and I'm going to get a benefit on my closing costs. So they really are hoping to help first-time home buyers quite a bit.
Okay. So
Thirdly,
is that this 0.625 and the 0.175, 1.750, that's a discount?
that is a discount off what it was. And I'll kind of
Okay.
explain that here in a second.
Okay.
Um, Also, borrowers with lower credit scores get some help. Fees for credit scores of 679 or below have lowered in almost all the down payment scenarios under these new changes, which will lead to lower rates, lower closing costs versus the previous rules. And then higher credit score borrowers with medium down payments, right in this range, and scores of 680 to 779 will see increases versus the previous rules. So where it is reddish is a higher LLPA adjuster,
Okay.
where it is green is an improvement to an LLP adjuster. Now,
Okay.
one thing I want to be absolutely clear about, and I put it here in this memo, there is no scenario where someone with a lower credit would have a lower fee. You will absolutely not get a better deal on a mortgage rate if your credit score is lower.
Okay.
Overall, lower credit borrowers will still pay more in LLPA fees than a higher credit borrower. The change is that they have just closed the gap. So they've spread these fees out when they used to be heavily loaded down here.
Okay. So,
And
so typically, a lot of people think it's going to be way more expensive now if you have bad credit, and they should just maybe ding their credit a little bit to get a better rate. And you're saying that's
no,
that's not true. Keep your credit
it's
good.
not. And that's been the headline that everybody sees in the news. I'm going to
Yeah.
tank my score so I can get a better interest rate. There
Yeah.
is no scenario where tanking your score is going to get you a better rate. The higher your score, the better the rate it will always be. The thing that has changed here is how these fees have been structured and how they're spreading them across all of the loan to values and all of the credit scores. So let me
Okay.
give you an example here. So if it's a $200,000 loan with someone with a nice credit score of 720, and they're doing a 5 to just under 10% down payment, they'll now have an LLP fee that is 0.375. So we'll wear it right here, right?
Yep.
Higher or $750 on that loan than it would have been before. Before it was 0.5%. Now it is 0.875. So they increased this category by 0.375, which means this borrower will pay $750 more for their LLP adjuster. Now, in this scenario today, this borrower would have a rate of 6.75 with 1 point, and then there's the APR. Now let's take the same scenario with a buyer with a 620 FICO score, so down in this area. And here, this person, same down payment, 5 just to under 10, he's getting a 1% fee discount, a decrease from the old fee of 3.225 to 2.225 for this bracket, and he will save $2,000 with this 1% discount off of his fees. But
Okay.
his rate today is 7.625 with 1 point. So
Wow.
you can clearly see he has a lower score. He's gonna get a higher rate, but his fees to get that rate have decreased so that his entry level into closing costs are lower than they would have been in the past. And someone with a better score is higher than they would have been in the past. So
Right.
overall, lower credit borrowers will still pay more in the LLPA fees than higher credit borrowers, excuse me. The latest change just kind of closes up that gap. So the old advantage of having no higher credit or making a larger down payment, it's just not as big as it used to be.
Right. Yeah. And in this scenario, I mean, if you have good credit, you're talking about $750 more, it sounds like.
Yeah, and in most cases, it's so hard to show the whole math. In most cases, that's going to, equal about an eighth to a quarter of a percent increase in the rate, or someone would pay more points to make that rate stay where they had originally wanted it to be.
So what
So,
would you recommend? Like, would you pay the 750 out of pocket, or would you say just take that fee and increase rate?
well, it really depends. If you have a borrower who is, um, income or money strapped, like they don't have a lot of funds for their closing costs and down payment, I would put it into the rate. If you have a borrower who has plenty of funds and he can absorb that, I would pay it up front. And that's usually
Right.
how I would split the difference there. Um, I did want to say, I was going to unshare my screen now so I can get back to looking at you.
Okay.
Um, I did want to say too that this again only applies to, FHA, or not to FHA, not to VA, not to USDA. It's only loans that people are now obtaining. It has no impact on existing loans, of course. I did have somebody call me the other day and say, I hear you're raising my rate on my mortgage. It's like, no, 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 you're in the clear here. But and it doesn't impact the roughly 40% of loans that aren't backed by Fannie or Freddie. So it is, you know, it's our standard conventional mortgages that are out there.
Well, and in this market, we're still seeing a lot of sellers offering closing cost credits.
Yes,
In some aspects, you won't even be impacted at all.
that's true. And it's kind of interesting because as they've added these fees, and keep in mind, we were told about these fees back in March, right?
Mhm.
They've now just gone into effect. They are already built into everybody's pricing, and this impacts every lender. No lender is free from this. But as this fee has kind of come in, interest rates are starting to kind of trickle down. So, if it had to happen, which I'm not totally on board with it happening, but if it happened, at least we're starting to see the rates decrease. So I'm really hopeful it won't feel like a big impact for most people.
All right. Now, I know a lot of people's concern is maybe we're making it more affordable for homes for people who have, say, subpar credit, if you will. Do you think by making loans more affordable for some of these people, we're going to see some defaults or faulty loans or anything like that?
I don't.
Yeah.
So traditionally, a borrower who is in that lower tier of credit scores and lower down payments is going to be an FHA loan borrower.
Okay.
Um, those almost always will have a lower interest rate and a lower cost entry for that borrower than a conventional. So if anything, I think it's just going to shift maybe a few more borrowers to the FHA area. And while I don't like this, I don't feel that this is a fair way to do it. What they're trying to accomplish is a good thing, right? Because obviously, there's huge barriers for people to get into home ownership. And the more we can do to obtain home ownership for all people and allow them to build wealth, the better our economy, the better our neighborhoods, the better everybody is
Right.
around, straight across the board. So I don't feel like this will start tanking it. I mean, 2008, Richard, there was, you had a pulse, you had a loan, right? You can't do that anymore. It is so hard to get a loan today. You have to prove ability to repay. Just because your closing costs went down a bit doesn't mean I'm giving you a pass and letting you into a loan that you can't qualify for. And I think that's really important for people to remember.
Right. Yeah. There's still strict standards and guidelines you guys have to follow in order to even
Absolutely.
get a loan. And
Yeah.
now it's kind of helping people offset some of their closing costs, it sounds like.
Exactly, exactly. So again, I do feel like I pulled up some not stats, but some, like the National Association of Realtors have come out. They're against this. They don't think this is a good idea, and they think it might hurt buyers at a time when affordability is challenging, as you and I know. Some experts believe the new rules are unfair because they effectively penalize buyers for higher credit scores, which I think that it does. I mean, we've all been told, get the best score, pay your bills on time. So, I can understand why people are unhappy with this. It's like, you're kind of attacking me a little bit to
Yeah.
help offset this. But at the same time, I'm happy if it helps more people get into homes. So I don't like this, and I wish they had come up with a better way of doing this without penalizing that middle tier, because I don't think it's super fair.
Yeah, it's tough because now they're coming up with, $750 or $1,000 more in that scenario and
Mhm.
than they used to. So that's tough.
Exactly. And that's why probably most people will build it into the rate. And I'm really hoping the rates just keep coming down so we don't really notice this.
I
And
think
you know,
everybody's hoping the rates come down.
well, it's interesting because the experts I follow, and I don't have a crystal ball, but they all seem to think we're going to be, into the fives, mid fives by the end of the year. And I am praying that they are correct because there'll be a lot of people who will be able to refinance who might not have been able to so far. And I'm sure you've heard that term interest rate locked, like people aren't selling because they're locked into their
Yeah.
fabulous 2.99 interest rate. So, if rates get down into low fives, that's not such a high stretch to maybe move up to that next home.
Yeah, that's why we're not seeing so many homes on the market.
Yeah,
Everybody who, bought a home or refinanced over the last few years has an incredibly low rate, and it just doesn't make sense financially for them to make the move right now.
I agree. But if that rate's 5%,
Yeah.
that's not like going from 3 to 7. I mean, ooh, 7%. So I
Well,
hope they're right. I'm gonna hold them accountable. I have them the recording saved. So at the end of the year,
yeah.
if they're not there, I can send that guy an email saying you missed this.
Yeah, yeah, that's awesome. Well, I appreciate you sharing that with us. You definitely shed a lot of light on that subject matter.
Yeah, I hope it makes
Sure.
people just feel a little better about it.
Yeah, and they're probably gonna have a ton of questions. So, like, what if somebody has loan questions? What's the best way they could get a hold of you?
Is my mobile number
Okay.
775-742-4055. And then they can always go to our website, the hope@brazilteam.com. I'm happy to answer more questions for anybody. And obviously, I love working with all your clients, Richard. He's my favorite realtor.
I'm gonna share this video around the office. Now you're in trouble. Yeah, definitely. And I'm gonna put your contact information in the email I send out
Awesome.
so people will be able to get a hold of you. And I
Great.
appreciate you spending some time with us.
Oh,